All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks. And I wanted to jump back on for many of you. You joined us yesterday afternoon for our overnight pop trade. This is a trade that we took in real time yesterday afternoon during the last 30 minutes of the session. And I mentioned I would jump back on today and walk you through how we're going to close it out. We just closed it out here within the last few minutes. So I wanted to walk you through what we did to close it out, how we did it. And that way you can see what to expect out of these trades. Now, today was pretty unique in that we really never got a significant move to the downside, right? I mean, you can see the S&P is down 3. It was up as much as 7 or 8 here earlier in the session. When we put this trade on yesterday afternoon, this was a call credit spread that we put on. We went out to the April 7 options, the options that were expiring here today. And what we did, and let me get the chart up so we can walk through the chart pattern here as well. We talked about this one yesterday, how the whole goal of this trade was to benefit from either a period of consolidation or a reversal to the downside. And the reasoning behind that was because the market has been so overdone on the upside. We've had pretty much 8-9 days in a row here where this market's been pretty darn strong. We talked about the yellow bars on our pulse indicator yesterday afternoon. That indicates price being between a 1 and a 2 standard deviation move on the upside. Typically, when you get that type of a pattern, in this case on the upside, you will see a period of consolidation. Well, you can see the last couple of days. What have we had? We've had pretty much a sideways move right up near the highs. Or you'll even see a pullback. Now, we haven't seen a significant pullback yet. That could potentially be coming here over the next few hours, next few days. We'll just have to wait and see what happens. But the beauty of selling a credit spread is out of this move, straight sideways. I mean, look at this 195-minute chart. I mean, there's basically nothing going on here right up near the highs. But we were still able to make money on the trade here today. So the trade that we put on yesterday afternoon, we sold the 407 call and we bought the 409 call at the same time. I've got this trade queued up on the screen. Yesterday afternoon, we got filled here live around 45 cents. I also put it on a second time and got filled at 52 cents. So anywhere inside of that range, I saw fills yesterday anywhere from 45 to 55 cents with our customers. So most people were filled inside of that 10-cent range. So the goal of that trade was for the stock to stay below 407. I didn't care if the stock moved up, down, or sideways. It didn't matter to me as long as price stayed below that 407 strike that we sold. Price right now is sitting at 405.80. Okay, so again, it hasn't been a significant move to the downside, but we didn't need it to be. Because look where the spread is trading currently. In live market action here, we're currently seeing that spread trade for 22 cents. So we really haven't seen the move that we were looking for directionally, but yet we were still able to book a profit. Now, how in the world does that work? For most of you that are buying calls and puts, you're used to looking for those big directional moves in your favor because that's the only way you make money. Well, in this type of a situation, by using a credit spread, we start to give ourselves 5 ways of making money. We made money if the stock moved up, down, or sideways. Didn't matter as long as it stayed below 407. We also made money from the time decay adding up. Time decay is significant this close to expiration. And then we also made money from volatility decreasing. Now, to close this spread out, what we have to do is go ahead and put in the opposite order. We sold the spread to open yesterday, so we need to come in and we need to buy the spread to close it out. If you still have this trade on, you can do that right from your positions tab. You can go to your positions tab. You would click on SPY. You can see I have zeros showing up here because my order was already filled to close out of the position. But if you've got numbers shown next to your position here, that indicates how many spreads you have on. So it could be 1, 2, 3, 4, 5, whatever your position size is. So to close out of that trade, you're going to hold down the shift button on your keyboard. You're going to left click on both of those options so they're highlighted in gray. I can't do so now because my position's already closed. But once they're highlighted in gray, you would right click on either of those options and there's going to be a menu that pops up. And you're going to select close out of the full position. That is going to take you back to the trade page. Let me go ahead and get this order queued up. Make sure I get the right one in there. So the spread down here is trading for 22 cents. I sent out the alert to our customers here a little earlier, and I said, okay, we haven't gotten the directional move that we were looking for. We normally like to close out of these trades during the first 60 to 90 minutes of the session. We were looking for a move to the downside. We really never got it. right? I mean, markets are just kind of chopping here. NASDAQ slightly higher, S&P slightly lower. So we just got this tug of war going on. So I ended up saying, okay, let's go ahead and close out of the spread for 26 cents or lower. Where did I come up with that 26-cent number? That would allow me to book 50% of the max profit based on my 52-cent fill price yesterday. I wanted to close it out, book the partial profit, and move on to the next trade. Could you hold into this afternoon? Could you hold all the way up to expiration this afternoon? You could. The problem with that is this close to expiration, the gamma is also very elevated. That means the options are very sensitive to changes in stock price. We could see this market rally right back higher this afternoon, and it could go from a nice profit to a loss very, very quickly. I'm not willing to take that risk, nor does my schedule allow me to watch the market that closely all afternoon. So I ended up closing out of the trade, took the partial profit here a little earlier. So again, the spread is currently trading for 23 cents. Can still close it out now. I also, in my alert that I sent out to our customers, I said, okay, we're going to go ahead and close the trade out now on our side. If you end up holding the trade, you could, we would be targeting 13 cents. If you wanted to hold into this afternoon and get closer to that 75% of max profit level, you could. In order for that level to be hit, you're going to have to hold a little bit longer, and you're most likely going to need another move to the downside on SPY. If you're willing to take that risk, if you have the schedule that allows you to track things into this afternoon, I don't have a problem with that. It's just not something that we did on our side. We ended up closing out of the trade. So here are the final numbers on the position. It's this lower line that I just highlighted on my spreadsheet. This is the trade that we opened yesterday afternoon, right around 3:30 Eastern is when we sent out the alert to our members, and then we closed it out here just a few moments ago, right around 11:30. So in and out in less than 24 hours. We opened it up for 52 cents. Yesterday, we closed it out for 26 cents here today. It took $148 of our capital to put that trade on. So very reasonable trade. You could have put it on with multiple spreads and still had a reasonable amount of risk. I put it on with 5 spreads in our live session yesterday afternoon. I had it on with additional spreads from the earlier trade. So I had it on with a pretty decent size. Ended up closing out of the trade, booking a 26-cent profit. Doesn't look all that impressive initially, but remember a couple things here. First, that was an 18% return on our capital overnight, less than 24 hours, in and out. And we never even got the directional move that we were looking for until late morning. And it really wasn't even a big move lower. I mean, the S&P is down $1.75. If you would have bought a long put yesterday afternoon, that long put would have been in trouble. I mean, it just wasn't a big enough move here on the downside. But because we used the right strategy, because we used the credit spread, we're still able to book an 18% return on our capital without getting the desired move that we were looking for. It's a very forgiving trade. This is why I love these types of setups. We're absolutely going to have cases. We've had numerous trades here the last few weeks where we're able to close these things out within the first few minutes of the market opening on expiration day. Today, it required us to hold a little bit longer. Not a deal breaker. Again, because we have the time decay working in our favor, we can afford to hold the trade longer. And this trade, I mean, with the S&P up 7-8 points earlier in the session, we were never significantly underwater on this trade. The most I was down on this trade was I think 10 cents or so per spread. These trades are going to recover much quicker because that time decay, even with the directional move going against us this morning, the time decay was still helping us. So really great trade there. Again, $26 a profit per spread doesn't look that great. 18% return on capital overnight. So a $78 profit if you are risking $500 or less on the trade. So we tracked it for that $78 profit number. We tracked it with 3 spreads. All right. So now we're out of the position. Our next opportunity for an overnight pop trade would come Thursday afternoon into Friday expiration. And that cycle is always fun because not only do we have SPY with options expiring, but any other stock or ETF that has weekly options, we have the ability to look for an overnight trade. So Thursday afternoon and Friday, it will in many cases give us multiple opportunities for the overnight trade. So we'll pick it back up here Thursday afternoon. All right, so I will try to jump back on here later on this afternoon and do more of a market recap where I'll take a look at conditions going into the end of the week. We'll take a look at some trades that are on our radar, trades that are setting up for us going into the end of the week as well. So if you can join us later on here today, that'd be great. If you have any questions on symbols that you're taking a look at, you want some feedback, some input from us on what we're looking for out of those products, feel free to join us. I'm more than willing to take a look. So if you have any questions on that overnight pop trade that we talked about yesterday afternoon, we just closed out here this morning, go ahead and type those questions in now. If you're watching the recording on Facebook or YouTube, you can always post a comment on that video or email me directly, mike@netpicks.com. All right. So congratulations to those of you that did take the trade. Nicely done. And we'll pick it back up here later on today with our next video. All right. We'll talk to you then.